Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what we can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, you guys, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Tuesday, Corey Buchan. He's coming in over on YouTube. I go live on YouTube as well, you guys. So if you guys are watching this and the stream quality is not good, I've heard YouTube has the best one out there. So go over to YouTube and just search for the Freight Coach. The audio only replay is up on iTunes and Spotify about 1 o'clock Pacific time. If you guys want to check it out later on that as well. Also, you guys, we do a weekly newsletter, and we're making some changes to the format of it for 2025, you guys. So if you guys want to register for that, just go to thefreightcoach.com, and then it'll auto prompt you to sign up for the newsletter. I don't auto sign anybody up through all of my contacts, because I get pissed when people do that to me. And I just believe in value added in a meritocracy for all of my stuff. So if you guys want to go to thefreightcoach.com to check that out, we're going to be adding in some market data into that, fuel prices, all of that stuff. So we're going to be doing that. We're trying to expand that out. And again, just keep it all value added for the transportation industry and make it applicable into your daily business. But today, I got a very special guest for you guys. It's me, solo show. I had a guest who had to make a change last minute, you guys, and which, you know what, it happens. And the beauty of it is I've been doing this for a very long time. I've been a broker for 15 years. I've been podcasting now for going on 5 years, and I got plenty of shit we can talk about. So, fuel prices, though, the first fuel report got released this year, and it's up again. So it's up 5 cents. It's at $3.56 a gallon nationwide out there, you guys. I get all of this information from the EIA, EIA.gov. So if you guys want to check that out, or if you guys want to see this report, this is a new addition into my newsletter. It's public data, so I'm adding it in there. And plus I pay my taxes, so the feds aren't going to do anything. But we're going to start putting that out there in the weekly newsletter as well for you guys to go in and check that out. It really helps with understanding what fuel is doing out there. It's going to help you price fuel and make better decisions, especially if you're out there bidding on freight that's line haul plus fuel. This will give you a better idea of going out there. So that's going to be in the newsletter. It's also at EIA.gov if you guys want to check that out. Robert Cowton, good morning. 2025, I believe the first 6 weeks will be difficult for carriers and brokers. Too many shippers are using multiple brokers to bid. Each load equals lower rates. Yeah, man, I think that, I mean, the first 6 weeks of any year in a normal freight market, you guys, January and February suck for freight volumes. All right. It's a tough time out there. Imports are going to be affected by it because, again, Chinese New Year. always affects import levels. So those are also things to take into consideration as you're kind of going on out there. But Robert, I agree, man. I think that it's going to be a interesting start to the year, to say the least. Steve Setka, and he said, "What's up, man? Stay high level, be creative, build relationships, and just keep grinding." Yeah, man. That's how I spent my morning so far. I got 20 cold calls in so far, you guys, as we're going out there and developing business. And one of my big sales strategies coming into this year is I'm not going to cold email people anymore. I'm only going to email them if I call in and they're like, "Hey, send us an email." That's the only way I'm going to do it, because, I was looking at my data from 2024 and like the new business development aspect of things. Almost all of our new business came from cold calling first and then starting to email with people. So we're going to roll with that strategy. And I know that there are a ton of internet marketers who are, fuming at that statement because they want you to think cold calling's dead. Cold calling is not dead. It is furthest thing from it. I will always go with that being the most effective way to develop business. I mean, out of the calls that I've made so far today, talking to people, I found out more information about the ones when, again, that they answered the phone. Okay, let me be clear. This wasn't 20 conversations that I had this morning, but the people that I talked to on the phone, I definitely got in and got more information from those 30-40 second conversations than I did by months of emailing with no response, right? So that's where that's my approach with a lot of this, and that's where we're really going to go through with that from a business development standpoint in 2025. If I'm wrong, guess what, you guys? It's my fucking loss. All right. But I know, because I actually operate in the industry, you guys. I'm not a consultant or anything. Not that there's anything wrong with being a consultant, but I'm not a consultant anymore. I am fucking straight up building up a brokerage, and I have that. Okay. I have that information and that data. And cold calling and site visits generated way more business for us last year than just plain cold email. So we're doubling down on that, and that's what we're going to do. Another slight change that we're going to be making out there to the newsletter, as well as the show, we're going to be talking about on this as well. This is I'm going to be bringing more lane data to the market, you guys. And again, this is stuff that I use in my actual brokerage. All right. I use green screens every single day to price out all of my freight. Guess what? A load that I won yesterday, one off of green screens rates again. But this is one thing that we're going to start doing. This is going to be added into the newsletter. So if you guys want to see this data and everything, just go to thefreightcoach.com and register for it. Or I'm going to talk about it right here. So my friends over at Green Screens sent over some comprehensive lane information. Okay. So as you're going out there, the reality is this, you guys, you're not just going to start with contracted freight more times than not. A lot of it is going to be last minute. Holy shit, we need a truck, get us a rate, and this is what's going to help you out. So if I'm going in there and I'm looking at this right now, we'll go after the top one here. Atlanta to Houston, 800 miles, about $1.75 is what the network is showing out there. But again, that's starting to trend up over the last 30 days. So again, if I'm looking at this, what happened over the last 30 days? All right, there was 2 holidays. People were shut down. Capacity rates go up naturally around that time. So that would be a benchmark point that I would want to look at, especially if I'm starting to move Atlanta to Texas, because the Texas triangle, which is Dallas, Houston, San Antonio, you guys, those rates are very similar. I'm not going to say they're the same, but they're very similar. So if you're moving freight out of Atlanta going into that area, you guys start benchmarking these and looking at that trend. All right. Because over 30 days, if the rate increases again, then my gut would say prices are starting to rise on that lane, and you would want to pay attention to that. But my gut, being as I've been doing this for a very long time, is going to show that that rate will probably level off here after the holidays. And again, my favorite freight out there and flatbed, you guys, Houston, Texas, going down to Lakeland, Florida at $2.16 a mile is what they're showing. There's a slight dip in price over there over the 30-day trend. And the prices are starting to drop on that because it is not flatbed season at all. Flatbed freight is down overall this time of year because, i.e., what's happening in fucking 75% of the country right now? snow, ice, everything else. Nobody's building, nobody's doing a lot of construction at a high level like they are over the summer months. So those are things to take into consideration. One point of emphasis I wanted to bring out on this sheet here are 2 lanes. All right. Again, I've been moving freight for about 14, 15 years now. So, again, take this for what it's worth. But Philly to Chicago drive-in, for example, that rate right there is almost identical to what it's been through the majority of my career moving that lane, as well as outbound Portland, for example, going down to Ontario, California, sitting at $1.20 a mile, you guys. That is very much par for the course. So as you're going out there, and you're getting new business in the Pacific Northwest or on the East Coast going back into the Chicagoland area, those lanes rarely change prices. All right. Yes, there's some seasonality of it, but for the most part, you guys, that's the stuff that you're going to want to pay attention to as you're going out there and trying to bid on freight, because contrary to what is kind of put out there, rates aren't as volatile as you would think, depending on who you follow on social media and everything else out there. And again, even if they are a little volatile, it is your job as a service provider to go in there and find that consistency as you are going out there and trying to build up your book of business. But that will also be now added into the Freight Coach newsletter as well. That's another little piece out there, you guys. Again, I'm just building this up to help you guys navigate through a lot of what I do and what kind of goes through my head as I'm going out there and actively moving freight. We're building this up from scratch, you guys. So again, some people might have a shit ton more data than I do. Obviously, if you work for a large broker who's been around for a very long time, you have a lot of data to kind of go through. So again, you got to start paying attention to some of those things as you're going on and building up your book of business. But we're going to go back a little old school. We just did this a couple weeks back, but we're going to go and we're going to break down some industry headlines today, you guys. Some of the biggest pieces of information that I think are coming out right now. With that being said, you guys, we are going to jump into the first article, and I like to pay attention. Like, I kind of break it down like this. I try and pay attention to what some of the larger publicly traded companies are doing, what that information is, because there's kind of a trickle-down effect on that. And I'll explain my methodology behind it as we go about this here. So first article we are going to break down is from FreightWaves, and that is going to be on freightwaves.com, and it is why Susquehanna is getting bullish on trucking. The truckload market enters 2025 showing signs of stabilization after 3 years of a freight recession. While earnings remain depressed across the sector, Susquehanna analyst Bascom Majors sees reasons for optimism that the industry is poised for recovery over the next 2 years. Majors writes that tangible signs of progress are still incremental. A holiday peak with seasonal lifts and tender rejections and slightly super seasonal drive-in spot rates, supported by our checks that reveal more optimism toward one-way truckload contract price this bid season. Again, Susquehanna's pretty big deal if you're not aware of them. And Bascom Majors, is one of like a top analyst out there. So he is somebody who I pay attention to a lot when he talks. He says that 2025 will serve as a bridge year to more meaningful improvements in 2026. He believes shares can perform well this year as incremental progress on pricing and margins over the next 6 to 9 months drives hope for a more meaningful price-driven earnings recovery in 2026. And I'm pretty much right in line with that, right? Like, I'm an optimistic realist, you guys, when it boils down to it in the 2025 freight market. I don't see a ton of meaningful spikes out there, barring any catastrophic black swan events. But I think for the most part is like I've been saying for a while now, I think you're going to see some incremental bumps throughout the year. And then at some point, people are going to look back and be like, damn, freight's up 20 cents a mile year over year and everything else. I don't think it's going to spike overnight is what I'm saying with that. And I think that is, again, I think a lot of it is tied into the Trump getting reelected. He's a very much pro-business president. He is very much trying to revitalize the United States economy, manufacturing, and everything else. He's already put a ton of stuff out there on tariffs and everything, and kind of the reason behind that. But, again, back into this article here. Knight Swift received a positive rating. JB Hunt was upgraded to positive. Hub Group received a positive grading. Robinson, which was upgraded to a positive as well. Robinson's kind of seen a major shakeup here with their. I can't say that their CEO is new anymore. He's been there for, I think, at least a year now or a little bit more, and he's taking a very different approach to years past, it seems, and they're starting to make a kind of a come up on that. Warner Enterprises saw an upgrade to neutral out there. And then underlying these upgrades is a major's belief that the trucking industry is approaching an inflection point after extended down cycle. He writes, we believe it appropriate to capitalize a greater 2026 profit recovery. Macroeconomic factors supporting this potential recovery include stabilizing truckload capacity, retail spending, and industrial production. And then Majors also notes that Class 8 tractor sales remained just above replacement levels. So, again, I think that 2025 is, I think that for a lot of the larger providers that are out there, obviously it's that trickle down effect. I think this is a really good article. I think that this gives a lot of solid information about where things are, and if there's a potential, and if there's an upgrade to the largest providers out there, what does that mean for me, right? Like, that's always the thing that goes through my head. If I'm a small business, medium-sized business, or maybe I'm just one person who's just starting out my dream, what does this mean for me? I look at it like this. All right. Oh, that article was from Freightways, by the way. I look at it like this, you guys. Everybody, it's like when you're going out there and you're developing business and you're prospecting new accounts and everything, and you're just really trying to get your name out there, like I am, right? For the most part, I'm just trying to get my name out there. I'm trying to get on people's radars for when they need us, because I know a lot of the larger providers have their claws in everything right now. Because when I worked for a large provider, it's kind of how we operated, right? We were everybody's best friend when we needed them, and then we are our highest paying customer's best friend when they needed us, right? So I think that if I'm looking at this, again, I'm always going to be bullish on prospecting and sales, because you should never fucking stop selling under any circumstances at all. You are not good enough. You need to go out there and develop more business. But when I'm seeing stuff like this, I know that when a lot of these volumes start to pick up from some of the largest shippers in North America, all right, when those freight volumes pick up, all of a sudden, the shippers who have maybe 5 weekly shipments, maybe 1 weekly shipment, full truckload, or maybe one a day, whatever that looks like, the on that end of the spectrum, now a lot of those larger providers stop paying attention to that, because you know what, they got better paying loads to worry about, right? So naturally people go towards the money, and this is where those new opportunities for individuals who are prospecting start to come about, right? Because, the tender got rejected, or there's nobody else that's out there who's looking to move our freight right now, or at least there's no reliability that comes along with that, right? So that is a very good sign, I think, when you see stuff like that, because that's where the opportunities are going to start to be, you guys. Again, it's going to start on the fringe markets and work its way up. All right. So start paying attention to this, you guys. All right. Chicago to Atlanta, the power lanes will literally be the last ones to recover. All right. So start in those fringe, maybe 100 miles outside of Chicago, for example. Maybe start hitting up those manufacturers. Those are the ones that people stop paying attention to first, and then it trickles back up. So pay attention to that, you guys. And again, you always need to be selling, okay? Always pick up the phone, get those calls in, hit that call metric every single day. Everybody's good until they're not, all right? I heard so many times yesterday, we're not adding anybody. We're good right now. Everybody's good right now until they're not. That's why I always try and find at least one yes on every single cold call. And that is, do you actually move full truckloads? Because I would hate to follow up with somebody that just does parcel or like LTL, because I don't do parcel or LTL from a new business standpoint. I only do full truckload, and that's what we're going after. And I'm looking for that yes as I'm following up. It's an even icing on the cake with a cherry on top if they are 100% flatbed as well. I really love those prospects, because those are the people who I'm filtering through to follow up with in the future. Carla Isted, good morning to you. Happy New Year, Carla. It's good to see you again. Nick Izzy, my guy. Let's go. What's going on? Cam, what's up? A potential guest on the show. A substantial increase is highly anticipated, and I am optimistic that positive developments will soon emerge. Just might take 12 to 18 months to develop. Cam, you should probably come on. We could talk about that, man. But I'm right there with you, man. I think that that's what we are going to really look like. And I think by, realistically by mid 2026, we should all be, as Reed Looselot says, everybody will be driving G-Wagons again by then. I'm just kidding about the G-Wagons. But I think that's exactly what we are going to be kind of looking at there from a recovery standpoint. But next article, again, I think this is probably one of the bigger stories that are out there. TTNews.com. Jim Davis, Happy New Year to you as well, man. He's coming in from Frankfort, Illinois. But you guys, back into this here. This is from ttnews.com. This is about the dock workers potential strike coming up, you guys, January 15th, which is a lot sooner than people think. I'm hoping that some mediation will kind of come in here to kind of prolong this a little bit more. But, at the end of the day, you guys, they've already done that. And their big thing here is I'm not a pro-union guy, like at all, but I really align with them on their sticking point here in these labor negotiations is their jobs. It's about automation, and I get that, right? Like, I don't want to be automated out of a job. Nobody wants to be automated out of a job. And I think like that's going to be the great balancing act out there is how do we balance automation with human capital as we're moving forward, right? Because like, I think it is way more dangerous to society to have a couple million people walking around with no fucking purpose because everything's automated. I think that's a major, major problem. But into the article, ttnews.com. The U.S. Dock Workers Union and their employer group will meet in New Jersey today with just over a week to hammer out a new deal. A strike that would shut every major U.S. East and Gulf Coast port down is all but certain if they don't clear the hurdles or agree on another extension. I'm a little bit more optimistic on an extension coming in here just due to the fact that President-elect Trump has met with the union about this. So I'm hoping they can come together with a framework or at least an extension to keep the ports open here. But in early October, obviously we know that they came with a tentative deal with ocean carriers, the Longshore Union, and terminal operators on a 62% wage increase over 6 years. The tough talking leaders of the union, President Harold Daggett and his son Dennis, who is second in command, have refused to bargain since mid-November. The ILA got some high-profile backing when President-elect Trump declared his support for the union in their fight against automation, which they said is a threat to dock worker jobs. And I would agree with that, right? For the most part, over automation, automation's a good thing. Don't get me wrong. But like when it comes to replacing humans, as I was saying, like there's got to be a fine line. So I completely understand where the union's coming from here. The Daggetts are demanding the right to add new jobs alongside new technologies and at terminals in Virginia and New Jersey, where the semi-automated cranes are already in use. According to two people familiar with the negotiations, the move has raised concerns for some USMX members and about the economics of the added labor costs. Meanwhile, the USMX is bargaining for a professional workforce, which the people familiar said would improve productivity over the casual workforce in place now and help make a 62% raise easier to absorb. And then it goes on to say, with just 10 days until the deadline for an agreement that averts a strike, leading retailers are implementing contingency plans. But the ability to keep the engine of global trade fully revving, in this case, lies with the ILA and the USMX. Again, I think this is a big deal that could happen in the event that a shutdown is actually going to happen. But I think that the timing of it, the support, my gut is this, all right? President Trump coming out and saying that he supports the union here in this situation, and the fact that inauguration is on the 20th, I think is going to cause a bridge of an extension talk until this all gets kind of finalized. I don't think with him coming out and publicly supporting the union and then having them go on strike 5 days before his inauguration and essential first day in office, I don't think that bodes well for the public vote of confidence that he gave. So that President Trump gave. So my gut is that there's probably going to be a tentative agreement put in place to shelve it until, a certain time frame. I don't know what that's going to look like. But again, I got a guest coming on next week who is very privy to a lot of the doc environment. All right. And they are a lot more qualified to talk about it than I am, but we're going to be out there to talk about that. That article, if you guys want to read up on that, ttnews.com, who gave that. And now I got to log back in here to this because the next article, there's lots of shakeups going on in LTL right now. I just saw that another LTL provider, there's another merger, or it could have been an acquisition I saw. I didn't have a chance to read into it, but there's a lot of that going on out there right now. And, it's, to me, I think LTL is damn near a monopoly, going on out there, and just the more M&A activity that goes on is just going to further my stance out there. And it all but eliminates the free market. This article is, again, it's from the JOC. My friend Eric Johnson wrote this one. Again, Eric is probably my favorite journalist out there in the industry. And U.S. LTL carriers widen market reach through spot pricing technology. The incremental shift toward more spot pricing in the LTL market speaks less to the titanic change in how shippers are procuring, than it does about there being easier path for certain LTL carriers to reach shippers directly. While the vast majority of LTL freight continues to move on shipper-specific contract pricing or more general pricing used by brokers, there has been an uptick in price or in spot, or transactional pricing in the LTL market. Some attribute this uptick primarily to the currently soft LTL market, with regular customers seeking competitive rates outside of their contracts. And that is a very crucial point about the realities of contracted pricing, you guys. People can always pull the freight and put it out to spot. There's a bunch of shit that can happen with it, right? So you need to make sure you're delivering that constant or that consistent pricing out there to where they don't feel the need to go out there and look into other providers. And then, one thing of this article that I really wanted to talk about is how they're targeting small shippers, and that LTL carriers are looking for new customers and new sources of freight, including smaller shippers and even transloaded international freight. And the last quarter, we grew shipment count with small customers by more than 10%, said Mario Hark of XPO. XPO has invested in technology, real estate, and in its sales force, increasing its number of sales agents by 25% in 2024. Hark said adding contractual rates represent about 80% of XPO's businesses, right? And, again, I look at it like this. There's a lot to this article, and we don't have time to break it all down. But then it goes on to say not all LTL carriers are going this route. An LTL executive who asked to not be identified said they're not seeing any major shift away from contractual business, but added that the carrier doesn't encourage that type of business either. The executive said brokers are getting a bit more transactional business, and that some LTL freight that moved to full truckload when truckload rates were low may be shifting back to LTL in drips and drabs. Everyone has a TMS now, he said, they said, I don't know who that was, and that makes tendering any regular smaller LTL shipment outside of contract easier. What does this mean for you? I think that people are with where things are right now. And, they brought up about how everybody has a TMS, like the data that is out there. And this is why, again, to kind of tie in broker transparency here, you guys, it's very challenging to make some of these margins on some of these loads that people are proclaiming out there because of the amount of data, because of the amount of information that's out there. And you better bet your ass that anybody that is in there and bidding on freight in the spot capacity, which they're talking about right here, is driving that price down. All right. The more hands in the pot, the lower that rate gets. And That's their fiduciary responsibility, is to find the most competitive price out there to move their customers' freight. But this article, you guys, is from JOC. My man Eric Johnson wrote this, and this was talking about LTL carriers widen the market reach through spot pricing technology. There's a lot of information in there. We don't have the time to read all of it because I got a job, just like each and every one of you. And I like to keep the show right at that 30-minute mark. And that's what we are coming up on here, you guys. If you guys got value in what you heard, though, do your boy a solid. Subscribe to the show. If you're feeling really, really ambitious, rank the show on iTunes and Spotify. Put that 5-star in there if you think I gave 5 stars of information. That's what really helps it get out there and into your network, because if you saw a value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.